Hello, today is the 9th of March, and let's proceed with today's market report. So, since the Bitcoin is already here, I think it's okay to start with this one. Obviously, these days, it's not only a risk-on stuff which tech bros trade. It has become quite relevant to the economy, to the current economy. And basically, what we see here now is a very interesting combination of good news, bad price action. So basically, it's downtrending now. It's downtrending, and it has been for a while. I don't know. You can maybe try to define it like this. There is a clear descending trend here, maybe with this border or maybe something like this. So yeah, actually you could even, from a technical standpoint, you could even see it as a worsening situation, going even outside of this very well defined channel in which it tried to stay for some moment. And there is a variety of factors actually which are affecting Bitcoin at the moment. The first and the most relevant one is probably the rates which are pricing in tariffs and overall distress in global trade, I should say, like overall context of the trade war. And also while defining this trade war, it's quite difficult to find out who will be fighting this war because news change basically every day or two or three at best, at most, I'm sorry. And what you could be sure about is that business doesn't like uncertainty, and it seems like that uncertainty is the new norm, at least for a while in this space, obviously because of political factors. And when business doesn't like current environment, it shrinks. There is no more incentive to invest. Therefore, the market doesn't need more money, and that's why the Fed is cautious. And they are not in a rush to cut rates. And to be honest, I'm even a bit surprised with their stance. I expected it to be a bit more hawkish, but maybe there are, as it is omnipresent these days, there are political factors there as well. But I was expecting them to be more ready to sort of openly declare unwillingness to cut rates, or maybe even hint on some possible future hikes. And that's why we see weakness in this space overall, and in Bitcoin in particular. Basically no low rates, no capital inflows, so nothing to allocate here as well. But there is also another factor, and it's in my opinion, it's a very good case of Cobra effect, because when everybody is expecting that Bitcoin Reserve will help Bitcoin, it could very well play out otherwise. Why? Because it's a good case of Achilles heel. Limited supply, very good in the world where everything gets printed and mined and diluted and so forth. But at the same time, when you go back a bit in history and you study what happened in the markets a century ago, or even more than a century ago, where so-called robber barons were cornering the market and manipulating it to their benefit. It was, of course, it could be mostly attributed to the lack of oversight, which is necessary to some extent in financial markets, but also it was a good case of basically unlimited buying power meeting limited supply. And that's why they were having the US stock market on their leash at that moment. And it's basically, in my opinion, playing out right now before our eyes with the decentralized finance space. Because obviously you get a nice pump when BlackRock goes into play and it jumps and everybody's buying and everybody's rushing to get it. But at the same time, you should understand that each time when somebody buys IBIT, BlackRock gets BTC. Therefore, BlackRock's influence in this market of limited supply grows with each purchase. And these days, they don't even use their own money. They just take money from retail space. And basically, retail guys are funding BlackRock acquisition of Bitcoin. And it's absolutely the same with the government, because in this space, basically, taxpayer is paying for Bitcoin acquisition. And what we get as a result, we get large, inhumanly large players getting more and more of something which is limited. And these guys, by definition, they have unlimited buying power. So the whole idea of decentralization, of creating an asset which is supposed to be free from influence of mega corporations or governments, the whole idea is basically gone at this point. And it will be continuing down this trend in the future. I mean, not necessarily financial trend, the price trend, but the trend of more and more governments and mega corporations buying this. And what happens next? Next, these guys get to set the price, because they and their desks are the real sharks of this market. And that's why it's quite difficult to trade well-developed liquid markets, for example, the US stock market, which we will discuss in a moment. Why? Because there are lots of very competent and shrewd players with their own interests who are playing against retail traders, boutique hedge fund players, and so on. So basically, to sum it up, bad macro, economic uncertainty, and first and foremost, uncertainty to be, just to say it in a very light manner, like in a very diplomatic manner, economic uncertainty and uncertainty about rates, and if you ask me, quite a good likelihood of even getting maybe prolonged periods of Fed inactivity or even a rate hike are getting higher by the day. So this is one factor, bad macro, and potentially hawkish, or at least reluctant to cut Federal Reserve. And the other is increasing control of large institutions over Bitcoin. So these two factors are pressuring the price at the moment, and to be honest, I don't see it changing in a foreseeable future. But you should also take what I say, well, like from a fundamental standpoint, with the grain of salt, because obviously technicals play a huge role in what I do. And once I see a good technical picture, I could very well start looking for explanations for a good price behavior. And one of them could be that world still is in need and quite likely will be needing more of decentralized, free of any mega institutional control system for storing value and for transferring value. So I think this will only grow in demand. And at this point, we have to wait till the market will price negative, potentially very negative macroeconomics and increasing influence of large institutions on this asset with its fundamental, so to speak, value, which is and fundamental idea, which is maybe not even store of value these days, but an international financial transfer system, which cannot be controlled. The only thing it could be controlled and potentially disrupted is by creating extreme volatility in it, and that could very well be the case here. We'll see. But this space is so fluid, and I think it's only a matter of time before we see even more advanced, more effective protocols which will aim to solve this problem. And also we have stablecoins for that at the moment. So we'll see. Okay, with that being said, let's take a look at the stock market. Stock market is now in a clear downtrend, and it's quite rapid. Also, we should take into consideration the fact that it is definitely oversold at the moment. Correction was abrupt, and at the lows it was more than 10%. That's quite a bit for basically 3 weeks. So a snapback could be a given within the next week. But once again, if we take a look at fundamentals, we'll see that there actually is a bit of decay here as well already. For example, ISM manufacturing PMI is worse than expected. ISM services PMI is worse as well, although not that severe. Non-farm payrolls are worse as well, and unemployment rate is higher. So we already see that businesses in the States are positioning to face the economic downturn, and that's why we see this this situation. Basically, the market was pricing in this information before it was released, obviously. So when we try to marry fundamentals and technicals, as I've mentioned before, and short covering driven snapback is to be expected, and it will happen at some point. But you also got to be understanding that fundamentals, macroeconomic fundamentals, are deteriorating, and they are deteriorating across the spectrum basically at this point. Let's also take a look at what we should expect during the next week, and it will be quite important. Yeah, lots of inflation data and a cherry on top of the cake, another consumer sentiment level, which I suppose won't be that optimistic, because basically I don't see any factors which could make American consumer optimistic right now. So maybe a snapback in the first half of the week, maybe on Monday and Tuesday, and this barrage of inflation data will could very well stop it. From a practical standpoint, volatility this high basically makes this market unsuitable for any kind of sustained portfolio management. Basically, it's a day trader's paradise. Obviously, among the guys who know what they're doing. And for the most of market participants, it's markets these days are just a no-go zone. So yeah, capital preservation is key at the moment. We should also take a look at gold, which is quite strong these days. Obviously, the London situation plays a role here, but this is a significant development to watch. Gold is stronger than BTC, and there was a moment where BTC wasn't that strong actually. I'm sorry, BTC was outperforming gold, and now it's just not the case. And take a look at these weeklies. Gold is definitely shining again. If we go back to economy, obviously there is no point at looking at IWM and MDY. Small and medium businesses are the first one to be actually severely hit by tariffs and economic uncertainty. And I really doubt that AI will be able to help them at this point. So that's why it's so weak. And the same technical situation could be very well at place here too, but you should see like the discrepancy in the volume in Nasdaq, which is quite stronger, and you see that basically people are buying MDY even at this point in fewer quantity. So once again, these guys are supposed to be hit by this new macroeconomic environment the most. Basically, the whole stuff, like mega cap names, are trying to jump. We even see some demand at this point among the best stocks. Duolingo is clearly among them, but you should also understand that this growth came after it corrected almost 40% from the top. Imagine having a position through these earnings, and yeah, everything looks quite weak. Like I don't even I really doubt that we should even bother looking at individual stocks, because there are good merchandise is so rare these days. But still, we should mention Chinese names, which are holding quite well. We also see a bit of a support in a very select group of names. InnoData is one of them. I think this company will be driving the real AI commoditization cycle, because obviously what we need now at this point, we need a space to deploy models. That's why Amazon is a bit stronger than other names, and we also need data to train open source models. So that's why InnoData, which handles it, is so strong. Take a look at the chart and spot the difference. And here is Amazon. Yeah, but it's quite important to mention that Amazon is very large, and you gotta be able to spot, pun intended, we just looked at Spotify, right players in this space. Another thing to mention, once again, Asian name, C Limited, holds very well. Obviously, a US listed stock, but a good case of territorial diversification here. And in my opinion, you should be looking for it now and in the coming months at least. And also another name is ASTS. It's a European Starlink alternative. Obviously, given the recent political developments between the States and Europe, this one could be very well the next big thing, despite the fact that it has already appreciated quite a bit. But yeah, a very, very good idea. Take a look at these sales. This is very, very impressive. Another name I've noticed is the ACMR. My guess here is that despite the uncertainty in the semiconductor space, this is a service company, and given the fact that AI goes nowhere in the near term, manufacturers will still be using services of this company. So that's why the relative strength here in this name. So with that being said, let's summarize our observations today. Caution is the most mild, the most diplomatic word to describe the current situation. And if you are not a day trader, if you don't already have a balanced portfolio, or if you are not a day trader, or if you are not a very experienced long-short portfolio manager, and you have already made good money in this downturn, which is not the case for me. I even paid a bit, but within small confines, of course, due to risk management. But overall, this is a no-go zone. Just there is nothing to do here for most of us. I mean, guys who trade these markets. But you should also understand that the market will be here tomorrow, and it's too early to proclaim the end of the US stock market as we know it. Well, maybe as we know it, yes, because it is becoming less global and more regional as we speak. But that doesn't mean the fact that there will be no opportunities there. The States will still be largest economy in a foreseeable future. It will still be the place to go for the most innovative businesses. And there will be, even if we are on the verge of a structural bear market, there will be snapbacks and there will be new ideas, and we gotta stay tuned. But there is also fair to mention that during these days, you saw it just like a few moments ago, how Chinese names, Asian names, European names show good behavior. So international diversification is not a privilege of true professionals like large hedge funds and global financial institutions. I think that everybody who wants to stay relevant in the markets should seek regional diversification these days, because obviously we never know how it plays out, how this whole situation, political and economical, will play out. So you got to be able to see what's happening in the market and be able to participate where possible. So, okay, let's see what the next week have for us, and let's be in touch.